If you've taken the time to build a nice nest egg, you're probably concerned about picking the next big stock. Questions that might be floating around in your head are, what if the market has a big correction?
Could I be paying less in taxes?
How do I see all the hidden fees in my portfolio?
How can I generate more income for retirement?
How will I get the most out of Medicare?
Should I claim Social Security early?
What will happen to my money if I get sick or die? We help people like you by designing a custom financial plan that can address all of these concerns and much more. If you're looking for a truly unique financial experience, look no further because this is what we do and we do it well.
Hello everybody, welcome back to another episode of Spot on the Money. I'm your host, Ali Hashemian. Today I have a very special guest, our friend Jonathan DiGirolamo, president of Finish Strong. How you doing today?
I'm good, thanks for having me, Ali.
I got a ton of questions for you. You ready?
Yes, sir.
All right, let's start with retirement. A lot of our viewers out there are baby boomers. Can you talk a little bit about why people are so worried about retirement and running out of money in retirement?
Well, a lot of things changed back in 2008 after the financial crisis, right? So people used to use what's called the 4% rule that basically said if I take 4% of my portfolio every year, I'm probably not going to run out of money. Did you know that has like a 60% failure rate now?
Wow.
Yeah, it's crazy. So it's because the bond environment is so low, the yield, right? Now it's starting to come back up, but we shouldn't count on the fact that these yields are going to remain as high as they are today. So that creates a lot of fear, and it's made advisors start looking for alternate ways to guarantee people's income, right?
Because you don't think that interest rates are going to continue the way that they have here recently at these high levels?
Yeah, I highly doubt it. Eventually, we're going to win this war against inflation, and things are going to return to normalcy, as they say, right?
Right, exactly. Yeah. So, tell me, if I have Social Security and pension, do I really need to worry about retirement if I'm generating that guaranteed income?
Well, everybody's got different needs, right? So if it's just income that you're focused on, you can still focus on, what is my tax efficiency, right? Passing things to the next generation. You also might have shortfalls too as well. So does your pension adjust for inflation? We know your Social Security does. But these are all things you should be looking at. Make sure nothing gets, blindsides you later down the road, right?
Yep. And this is a big part of what you guys do for clients is some of this Social Security maximization, pension maximization, and things like that.
Absolutely. We look at all aspects of people's retirement. We look at their bills, when things go away, like a mortgage, for example. All these different things, what we can count on, what we're leaving to chance. And then we make sure that no matter what happens, they're going to be okay.
And we all know that, one of the main fears of retirees and pre-retirees is running out of money in retirement, right? Mm-hmm. And I always like to say this is causing a lot of people to live what I call a just-in-case retirement. Mm-hmm. What I mean by that is people that would love to travel all around the world, but they don't do it because they don't want to run out of money in retirement. And what ends up happening to these people is their kids get all the money, and guess what the kids do when they get the money? They take the trip around the world. The difference is they do it in first class, right?
Isn't that the truth?
But tell me a little bit about what people should be doing. I know a lot of people out there don't have a written retirement plan. And again, for our viewing audience, there are going to be some great things that we're offering to you. Jonathan has made it available to all of you that call in. But tell me a little bit about what you guys do when it does come to retirement planning and putting together a retirement analysis.
So we have a process in our firm. The first appointment when we sit with people, we call it the discovery, right? We're trying to figure out exactly what all the moving parts are, your budget, what bills are projected to be forever. We even adjust things for inflation. After that, we take care of needs, wants, and wishes, right? The needs, we cannot gamble with this. This needs to last into perpetuity, right? Mm-hmm. Then with the wants and the wishes, that first class trip around the world, right? That's the stuff that we can take a little bit more risk on, and it's great if we have it, but if we don't, we know their bills are paid, right?
Can you say that one more time? It was needs?
Needs, wants, and wishes.
Ladies and gentlemen, write that down. Needs, wants, and wishes, right? Those are the things that you want to make sure that you're paying attention to when it comes to retirement. So Is it just for the baby boomers that need to worry about retirement, or are you dealing with people that are younger starting to think about that early?
Oh, all walks of life, all walks of life. So if you ever pull out like a compound interest calculator and you look at the difference of somebody that starts at say 25 versus 35, it would blow your mind, right? So it's so important to start young as well. So we work with all different types of people. My little brother is in his 20s. So he relates to those people a lot. You know, I work with the people my age and I also help the retirees as well. But yeah, it's funny how, you know, as people near their retirement years, that risk taker that they've always been, they start to kind of slow down, and that's totally natural, right? Yeah.
Talk to me a little bit about RMDs, required minimum distribution. So we talked about the younger person that's planning for retirement, but the older person, the person in their 70s, they have to think about this required minimum distribution. There's been a lot of changes. Can you tell me a little bit about that?
Yeah, so the Secure Act 2.0 just passed recently, and it changed a lot of the rules pertaining to RMDs. So one of them is they've made the ages now later on. So if you haven't yet started RMDs, you may not be starting to 73 or maybe even 75 if you're a younger person in the crowd. But what I hear from everybody is some of these people, they need the RMDs, but for the most part, it's people going, dang it, why do I have to take this money, right? And there are ways to reposition assets so that RMD hit, if you don't want the money, by all means, let's try and minimize how much you're taking, right?
Yep.
But yeah, so much changing in the tax world all the time, and that's why it's important that your advisor isn't just focusing on returns, and we all do that, right? But also keeping up with the current tax laws and the ever-changing tax environment.
And when it comes to required minimum distributions, there are some things that changed as well when it comes to how people inherit this money. Can you talk a little bit about that?
This is a huge one. So we meet people all the time that maybe they've got an IRA and that's their legacy plan, right? But used to be the way it was before Secure Act 1.0, they had a thing called a stretch IRA. The stretch IRA, you could take very small amounts based on the person that inherited the money's age. But now the stretch IRA is gone. You have to take all of that IRA out and completely cash it out within 10 years.
And what's the problem with that?
The problem is these people may be working, they may be in a high tax bracket, right? They don't want the money. Maybe they would rather defer that and leave it for retirement or, you know, their own retirement, right?
Right.
So being forced to take money you don't want, hey, I'm a patriot, but I don't love my country more than my kids, right? So I want to leave as much to my kids as I can. So when you have money in those pre-tax allocations, just know your loved ones that inherit it, they're going to have to take that money over the course of 10 years, and it may not be at the opportune time, right?
Right. And so what are people supposed to do with this money, especially if they don't need it? What do you normally suggest?
Well, if somebody's got money just sitting in an IRA, and they've made it very clear, we run their income analysis, we run their Monte Carlo simulations, all of this, there's no shot they're running out of money, right? And they're saying, I want this to get to my kids, my grandkids as efficiently as possible. Let's start looking at Roth conversions, right?
Okay.
Yeah, so Roth conversions, I think we're gonna probably talk about that later.
Yeah, let's definitely talk about Roth, especially in the next segment, because I want to talk to you a little bit about taxes, and I think that goes right into it. But before we break for a commercial, can you tell us a little bit about the written retirement analysis? Because you had mentioned Monte Carlo.
Yeah, so everybody may have saved enough money and they've run the simulations to see if they're gonna have enough in retirement, right? There's two different things though, knowing you have enough and knowing how to get it the most efficiently. So Social Security, for example, it's not inheritable. I mean, you may have a spousal benefit that you can leave when you're gone, right? But these things are not inheritable. So sometimes it depends on where are you taking from your different retirement buckets, which one are you gonna draw from first, which one later, do it in the most tax efficient manner. And these are all things that we plan for with people.
Well, folks, you're hearing it directly from Jonathan with Finish Strong. They have a great offer for you. For the first 20 callers that call in, they're going to give you a copy of this book, Overtaxed. We're going to talk about taxes in the next segment as well. But more importantly, they're going to give you a full written retirement analysis so that you can see where you are, where you should be, and how you can get there. Again, folks, if you don't have a written retirement analysis, I urge you to give them a call, 888-908-0286. That's 888-908-0286. Remember, retirement's supposed to be your golden years, not your beholden years. Let them help you get there.
If you've taken the time to build a nice nest egg, you're probably concerned about picking the next big stock. Questions that might be floating around in your head are, what if the market has a big correction?
Could I be paying less in taxes?
How do I see all the hidden fees in my portfolio?
How can I generate more income for retirement?
How will I get the most out of Medicare?
Should I claim Social Security early?
What will happen to my money if I get sick or die? We help people like you by designing a custom financial plan that can address all of these concerns and much more. If you're looking for a truly unique financial experience, look no further because this is what we do and we do it well.
Welcome back for our next segment of Spot on the Money. Again, I'm your host, Ali Hashemian. I got my guest here, Jonathan DiGirolamo with Finish Strong Financial Services. Jonathan, thank you so much for all the information you gave us about retirement in the last segment. I'm going to swing it now over a little bit to taxes, but let's talk about Roth, what you were talking about. I think a lot of the viewers out there have heard of Roth, but don't know necessarily all the details and strategies. What can you share with us?
So maybe you're a person maybe you thought you didn't qualify to contribute to Roth IRAs, right? That's pretty common. High income earner, maybe you couldn't contribute, but you can still do Roth conversions, or some people call it a backdoor conversion, right? So this has been a very valuable tool. This has been a very valuable tool in our firm. A lot of times we meet people and they say, hey, this whole IRA, I don't need it. I'm having to take required minimum distributions, money I don't even need. What if they were to take a portion of that and convert it to Roth IRA? They pay the taxes up front, right? But now that money that they converted is no longer subject to RMD. It gets passed to the next generation and they don't have to pay taxes on it when they get it. This has been a huge draw to our firm because a lot of advisors don't focus on these things.
And a lot of people think that they shouldn't do Roth because they might be in a lower tax bracket when they enter retirement. But what are your thoughts about that?
I mean, nobody has a crystal ball, but we can just look at the numbers, right? In our seminars, we do these historical summaries of basically what were the highest federal income tax rates at any point in history. And when you look at the tax rates that we're in today, they're relatively low, among the lowest, right? So how does the government generate revenue to pay the national debt, which maybe you guys at home have been noticing it's getting a little high, right? That spending has got a problem, right? So how do they generate that revenue? They can do it two ways, taxes and issuing bonds. Well, we've got a problem because not only are our taxes relatively low, and the Trump tax plan is about to sunset in 2026, but a lot of countries not only are not buying our bonds, but we're seeing a lot of countries also dumping our bonds. So if we're having issues selling our new bonds to finance our debt, where is the money going to come from? Taxes, right?
That's right. Yeah, and I know it's a scary thought to think about, but tax evasion is a crime. Tax avoidance is your right as a taxpayer living here in the United States.
Absolutely.
So Roth conversion is a great way to avoid potentially taxes in the future. Do you guys do a lot of analysis when it comes to Roth conversions, or how do you see that play out?
Yeah, so part of our 64-point analysis that we do when people come sit with us, and that's complimentary, by the way, just seeing if we can help them, we will show you, here's if you do nothing, here's if taxes go up to a certain rate in the future, would it benefit you to do a Roth conversion? And for some people, it's a no-brainer. It's like, absolutely, we need to do this, right? For some people, it's yes, but a very small amount, depending on their current tax situation. And for some people, it just doesn't make sense. But more often than not, at least a small percentage of your traditional IRA assets, 401k, whatever it may be, should be converted. And we do a lot of these. We love helping people with it.
A lot of our viewers use a tax professional like a CPA or an enrolled agent, and some of them are doing it themselves on something like TurboTax. Can you explain a little bit the difference between tax preparation and tax planning?
Yeah, I love this question. So it's funny because tax professionals, right, tax preparers, they get their joy in seeing that smile from the client that, oh yeah, I got you an additional deduction and I was able to save you $1,200 this year, or whatever it may be, right? But maybe it wasn't the best for your long-term strategy, and by doing that, it's gonna end up costing your heirs in taxes in the future, right? So the tax, the H&R Block guy, or the whoever your tax preparer is, their incentive often is to give you that instant gratification, right? We're more focused on the long term. So it's good when your advisor, when the right hand knows what the left is doing, right? So we like to work with people's tax professionals and make sure they understand exactly what we're doing and what we're trying to achieve. And then people go, yeah, maybe I didn't need that deduction this year because now my heirs are gonna have more money when I'm gone, right?
And can you tell us a little bit more about that and some of the other big mistakes that people make when it comes to tax planning or tax preparation?
Yeah, so like right now, you have a lot of people, everybody knows, oh, I put money into my 401k, my IRA, whatever, right? Maybe you don't qualify for Roth contributions because you're a high net worth, high income person. But we should also be looking at what do we think future tax rates are going to be? I think we're all in agreement. They're probably going to go up before they go down, right? So we should be looking at what type of contributions do I want to be making, right?
And when it comes to taxes, I know a lot of people out there think that taxes are going to go up, but it's only going to affect the ultra wealthy. What do you say to that, especially for people that only have a few $1,000,000 or even just a few $100,000? What are your thoughts there?
Yeah, I mean, throughout history, right? I never see them getting rid of taxes,
right.
Whether it's estate tax or state tax or save the tree tax, some tax they haven't thought of yet, but you better believe they will. I just don't see it. I mean, taxes don't seem to always go up, and we're in a really good environment right now. I can't see it getting any better, but.
And you talked a little bit earlier about Trump's tax laws and how that's about to change. Can you tell us a little bit more about that?
Yeah, so the Trump tax plan, which for lower, middle, and upper, if you put the old tax brackets right next to the new ones, it's an objective fact we're all in lower income tax brackets right now. And so that tax plan that features those lower income tax rates across the board is going to be sunsetting. What that means in layman's terms is Congress is going to have to get together, have an honest look at the national debt, and decide, can we afford to keep these taxes this low? And they're already talking about it in Congress. Do we keep it? Do we get rid of it? Do we raise taxes? What are we going to do? And I think we all know what direction it's probably heading, so it would behoove us to start taking the actions now while we're in these lower tax rates.
And everybody talks about income tax, right? But there's a lot of different taxes, like you said. There's dividend tax, capital gains tax, Social Security tax. Can you talk to us a little bit about capital gains taxes? Because I know we have that new increased bracket, the 20% capital gain bracket and the Medicare surtax, but a lot of the viewers out there aren't familiar with capital gains tax and they just look at income tax. Any thoughts you have there?
Yeah, so it's always a good thing. It's kind of bittersweet when you pay capital gains tax, right? It means I made money. This isn't something we should be angry about. It beats the alternative. But you can also loss harvest as well. You got a position that you've fallen out of love with. Hey, let's exit and let's get that write-off, right? You can carry those over for future years. But yeah, there's a lot of ways of doing it, and these are all things that we help people with when they come in and sit.
All right, ladies and gentlemen, you've heard a lot about taxes from Jonathan here, and if you'd like to give them a call, they're offering you two things absolutely complimentary. First is a copy of this book, Overtax, which will go over 6 of the top tax-free strategies available to you living here in the United States. But probably more importantly is their comprehensive analysis. It'll go through not just taxes, but retirement, investments, estate planning, insurance, everything that you need to know about your financial life so you know where you are and where you should be and how to get there. First 20 callers get this absolutely complimentary. Just give them a call, 888-908-0286. That number again, 888-908-0286. Please hang tight through the commercial break because I got a lot more questions to ask this man. We look forward to seeing you in the next segment.
If you've taken the time to build a nice nest egg, you're probably concerned about picking the next big stock. Questions that might be floating around in your head are, what if the market has a big correction?
Could I be paying less in taxes?
How do I see all the hidden fees in my portfolio?
How can I generate more income for retirement?
How will I get the most out of Medicare?
Should I claim Social Security early?
What will happen to my money if I get sick or die? We help people like you by designing a custom financial plan that can address all of these concerns and much more. If you're looking for a truly unique financial experience, look no further because this is what we do and we do it well.
All right, ladies and gentlemen, welcome back to the final segment of this episode of Spot on the Money. Again, I'm your host, Ali Hashemian. I got my guest, Jonathan from Finish Strong. He's answered all these great questions. Thank you so much. I got one more question about taxes before I start talking to you a little bit about what people should look for in an advisor. What do you think about the IRS and our tax system as a whole? I know it's a broad question, but I'd like to get your take on it.
Tax evasion is a crime. Tax avoidance is your right, right? And like I said, I love my country, but the IRS, right? I love my kids more. So we should always be looking at ways to maximize what stays in our family's pockets and what goes to the IRS, right? You can think what you want about the IRS, but I'll tell you one thing they're not stupid, okay? But there are ways to maximize things and make sure that you've got your goals taken care of, that more is staying with your family.
Yep. So I know taxes are complicated. We talked about retirement. That's not any less complicated. You help clients go through this journey, I guess, of retirement and tax planning. Can you tell me a little bit about what got you into this business?
So this is a third generation family business, actually. My father brought me in about 9 years ago, I want to say, but I knew exactly what I wanted to do since I was a little boy. So some of us want to be the pitcher for the Dodgers or whatever it may be. No. I looked at my dad, I saw that suit, and I saw the cell phone, or the cell phones, remember that? Yeah, but I knew from a young age exactly what I wanted to do and why I wanted to do it. My dad would come home to the dinner table and tell us how he was able to help people. And then I found out, this is a really mutually beneficial business, right? You get paid to help people. What better position could you be in, right?
Yeah, and this is help people really need, because outside of your health, outside of your family, your finances might be one of the most important things. Tell me a little bit about how it is having your dad as boss.
Oh, it's a lot of fun. So my dad's my best friend.
Okay.
Like, we bounce stuff off each other all the time. We call him Boom Boom.
Okay.
That's what my son calls him. It's short for boomer.
Okay.
So my dad, when we'll be talking to clients and he goes, oh, I can't figure out the Zoom thing, and that's what I'm here to help with, right? But so my son calls him Boom Boom, and my dad loves it. We have this, when you come meet with us, when clients come meet with us, it's really apparent that we are not just father and son, we're best friends. So I couldn't think of a better team to work with.
Has it always been like that?
Always.
Yeah?
My dad's my hero.
Yeah?
Yeah, always.
That's so wonderful that you guys get to work together every day doing that.
So fun.
Tell me a little bit about what people should be looking for if they are looking for financial help or a financial professional.
Huge thing. Make sure that your advisor is holistic,
Okay.
right? So we all, we get our statements and we look at the net asset value. We look at the returns. Yeah, we do that too. Everybody does that, right? But what's important is your financial plan should be this perfect symphony. Like, everything should be working in conjunction with everything, right? You want to make sure that not just do I have enough income, but are my legacy goals intact? Am I pulling from different allocations, different buckets of money in the right order so that my kids are going to get the most when I'm gone, right? There are so many different things. So that all comes from, is your advisor holistic, or are they just a stockbroker that just focuses on returns, right?
Yeah, and I think that's something that a lot of people are missing, is that holistic approach to financial planning, because there's so many different parts of finances, right? You got investments, you got taxes, you got retirement, insurance, estate planning, all this stuff. Anything else, though, that our audience should look out for besides just a holistic financial planner?
Yeah, so a lot of people I find have no idea what they're paying in fees.
Okay.
I'm not knocking fees. This is how I feed my family, right? But you should know what you're paying. And then you should look at, I have so many people that they have absolutely no idea what they're paying. Maybe they know what their wrap fee is for their advisor, but depending, when you pop the hood on their portfolio, oh, what's this real estate investment trust that we have here?
Right.
How much is that costing me? And am I getting the adequate returns to justify that fee? Maybe it is. Maybe you're getting a discount. But part of our 64-point analysis that we run, it gives you the full knowledge of exactly what you're paying. And make no mistake about it, an extra 0.5% on $1 million portfolio over 10, 20 years, quantify that. It's a big deal, right?
Yep.
So if you don't know what you don't know what conversation to have with your advisor. If nothing else, come back and tell them, hey, I noticed this one cost me 0.5%. What exactly is that again? And why am I paying it? Right. And maybe you'll find out it's more than it, you should be paying more. You love this investment, but you won't know unless you get an analysis done.
Yeah, and my father always taught me when I was young, people don't mind paying for a service as long as they know what they're paying, as long as they're getting something for it, right? And I heard this crazy story the other day about a gentleman that was paying 2.5% in fees he didn't know about on $1 million portfolio. So that's 25 grand a year over the last 10 years. $250,000 worth of fees that he was paying that he didn't even know about. So I love that what you guys do is kind of bring transparency to the fees section of the portfolio. Tell me a little bit, if you don't mind, about what somebody can expect if they meet you the first time.
Oh, so our appointment process, we are not pushy people at all, right? The first appointment, we're just gonna hang out, we're gonna eat some snacks together, and then we're gonna get to know each other. And what we do is we gather all of your information. This is everything about, where you're positioned, what your assets are. People bring statements. And then we talk about their needs, their wants, their wishes, right? We figure out their budget. We don't just look at what is your budget now. We want to know, hey, do you have a mortgage? When does that fall off, right? Everything is completely detailed. And then once we gather all of their information, we put it in that binder that you've been showing people, and we present it to them in the second appointment. If nothing else, we've identified some things that you may want to talk to with your advisor, but more often than not, we find something that we can help people with, whether it's long-term care planning, estate planning, Roth conversion on a small amount, a big amount, whatever it may be. But I don't think I've ever met with somebody that didn't walk away from it feeling like they at least learned something, right?
And let's say we learn something in that second appointment. What are the next steps from there? Is everybody starting to work with you after that second appointment, or how does it go?
Oh no, so some people, they see their analysis and they're blown away, right? And they're like, hey, I'm ready to go. In that case, my concierge team walks them through the whole process. We make it very easy to sign up with us, and we walk them through every process along the way. We update them on where we are with transfers. We make sure everything happens very seamless. But some people, it's a big decision. This is your life savings, right? You worked hard for this money, and they need to go home and think about it, and they come back with more questions. Then the nerd in me comes out, and that's when I start making PowerPoints and try to make it come to life, right? My dad says, Jesus spoke in parables, so let's put it in crayon, make it easy to understand, right? We can all use $10 words and talk over people. I want people to learn what we're doing, our why, and why we're doing it, right?
I love it, Jonathan. Thank you so much for your time. Ladies and gentlemen, as you know, this show is really meant for educational purposes. But if you are concerned about any of the topics that we talked about here today, taxes, retirement, any of that stuff, I'd urge you to give Jonathan and his team at Finish Strong a call. They're willing to provide the first 20 callers with a detailed, comprehensive analysis relating to all areas of your financial planning, as well as a copy of this book, Overtax. All you got to do is give them a call at 888-908-0286. That number one more time, 888-908-0286. If you're concerned, you're worried about any of these financial topics, don't procrastinate. Get on it. Give them a call. Thank you again for being with us for this episode of Spot on the Money. We look forward to seeing you next time.
If you've taken the time to build a nice nest egg, you're probably concerned about picking the next big stock. Questions that might be floating around in your head are, what if the market has a big correction?
Could I be paying less in taxes?
How do I see all the hidden fees in my portfolio?
How can I generate more income for retirement?
How will I get the most out of Medicare?
Should I claim Social Security early?
What will happen to my money if I get sick or die? We help people like you by designing a custom financial plan that can address all of these concerns and much more. If you're looking for a truly unique financial experience, look no further, because this is what we do, and we do it well.